please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, deeper cuts actually on the Nifty below 10,500. So keep an eye. We'll come back and do that. First, let's listen to how the commodity markets have opened. Manisha Gupta is joining in.
Well, mostly in the red is what the commodity markets also are looking at today in the morning right now. So the crude oil prices, let's begin with that. And 0.5% down in the global markets right now, far away from that $80 per barrel mark. And that's exactly what the Indian space seems to be doing. Nearly 0.2% on the lower side, and 5,000 yet so close, but too far away is how we are treating that level right now. And the street really seems to be getting divided on where the crude oil prices could be heading in from here. There is 60 and there is 90. And between that is where the crude oil prices are holding right now. The most important event to watch now would be the 22nd June OPEC meeting, and the review about the global demand, supply, prices from there on is what will set the further course for the crude oil prices from here on. So until then, it really is going to be about statements, views and expectation from that meeting. That is what will keep those prices moving. The gold and silver also has been quite stable for last 24 hours. We have seen the US dollar rally take a bit of a pause, and that perhaps has helped the gold and silver prices on the lower sides there. So on your screens, 1/10% of gains is what we are seeing. Very marginal buying on your screen there. The base metal prices, while yesterday was a better day, but today we have seen more profit taking than buying there. Copper prices are trading off their 1-month highs. We have seen nickel prices come down sharply as well, and that's because the steel prices in China are down to around 5-week lows. The iron ore prices are trading 1.5% on the lower side. Almost everything from coking coal to aluminum to zinc and lead prices are trading in the negative in Shanghai markets. That's really because of the kind of output numbers that have come in for the time of 1st May to 10th May have been much on the higher side. So that tells you that the supplies are building up and demand really isn't able to match that. That's what's weighing there. Add to that the fact the US statement saying that the US and China talks aren't exactly on the positive side. It is yet another factor that this market is taking in right now. Trading strategies, and we have them from Angel Commodities. They have a sell call coming in for zinc prices. 205 is their target onto that one for today. And the other commodity that they're looking at really is crude oil prices. A sell on that with targets at 4860.
Okay, Manisha, thanks a lot for that. Well, let's move on. Symphony stock has lost 17% this week, 23% this month. That's because the company posted a weak set of earnings. Revenues declined, volumes were low, while unseasonal rains dampened their sales during the quarter. And Rupesh Shah, the Executive Director, joins us now to talk about that. Mr. Shah, good morning. At a time when, it was such a scorching summer, one would have expected better sales for you in the quarter gone by. What went wrong? How come your revenues fell this quarter around, and do you expect more pressure in the quarters to come?
So until February, there was a robust growth, robust performance, but starting March, during which in southern India, retail sales start, and then after in other parts of the country, retail sales starts. But as it is known, in many parts of the country, there were occasional rains, season was not that good, and there were also thunderstorms. So to an extent, it has been impacted in the last quarter. But we need to see the performance in totality. That is, on a consolidated basis, top line has grown by 5%, and same is the case on a standalone basis on YOY, while PAT on a consolidated basis is up from 166 crore to 193 crore, that is up by about 16%. In fact, for the first time on a consolidated basis, consolidated PAT is higher than standalone PAT, and in that respect, vis-a-vis previous year, there is a swing of almost 18 crore.
Okay.
That's number one. Number two, last year as a whole, considering bad summer of 2017 as well as 2018, many of our peers would have degrown. As far as Symphony is concerned, there is a marginal growth, and leading to not only maintaining the market share, probably we would have increased the market share, and all our profitability ratios are intact.
Okay.
And in an industry like us, which is a weather-oriented industry, there may be a quarter or two like this.
Okay.
We are more focused on generating long-term CAGR growth.
Sure. Now, I take that point entirely, Mr. Shah, which is what I'm coming to, longer term. In your presentation, you are saying that you are entering the third phase of your existence. Can you detail that for us? Do you actually mean the industrial cooler segment when you say this is the third stage? What can be the return on capital employed on that segment?
So in the third phase, as we have articulated, we will be different and still we will be the same. So what we mean by that, we will be different in respect of our focus, in respect of our strategies, in residential room cooler, in domestic market, major thrust on centralized air cooler as well as international market. In respect of international market, maybe organic as well as inorganic growth. But our basic philosophy in respect of asset light, capital light, substantial free cash flow and outsourcing will remain intact, and in that respect we will be the same. And enabling strategies and business model have been worked out and they will be folded down the line.
Sir, can you just elaborate? I mean, I expected you to elaborate on the industrial cooling solutions segment. What kind of demand are you noticing over there? Is that a high value segment and your plans?
Yes, industrial cooling is a high value product, but having said that, depending upon the kind and type of the installation, small area to large area, the ticket size varies, but certainly it is substantially higher than the residential air cooler. That's number one. Number two, so far, Symphony has made thousands of centralized air cooling installations in the country as well as in northern India across the industry and segments, and overall it has been received well.
Okay. What is the market share currently?
Market share in residential air cooler?
Overall?
In overall in residential air cooler, Symphony's market share is at least 50% in organized sector in value terms.
Okay. And
You
so
mentioned in your
50% is the organized market share that you have in the residential air cooler segment. What do you expect to see any kind of growth over the next 1 year in your market share?
See, we are already up in terms of market share from 42% 3-4 years before to 50%, despite many more players have entered. Our major focus is on achieving CAGR growth in the long term around 20%. So it's not about the market share, it's more about the 20% CAGR growth by maintaining the profitability.
Okay. Okay, Mr. Shah, you know, your press release mentions that the board of directors considered a proposal for an international acquisition. Can you tell us what kind of size you are looking at, what kind of money and where?
I'm sorry, we are bound by confidentiality agreement and international agreement.
Okay.
So once it materializes, we will be in a position to disclose. But just to be sure,
okay,
as per Symphony's philosophy, only if it is a reasonable valuation, only if it is a EPS accretive, and only if it is in the same line and or complementary to our line, we are proceeding with that. And as of now, we have given the non-binding offer.
Okay. So just one final question then. What is the industrial segment
looking at? What kind of money and where?
I'm sorry, we are bound by confidentiality agreement and international agreement.
Okay.
So once it materializes, we will be in a position to disclose. But just to be sure,
okay,
as per Symphony's philosophy, only if it is a reasonable valuation, only if it is a EPS accretive, and only if it is in the same line and or complementary to our line, we are proceeding with that. And as of now, we have given the non-binding offer.
Okay. So just one final question then. What is the industrial segment market share currently, and what kind of growth do you foresee over there?
About industrial air cooling total contribution is concerned, at a consolidated level, it constitutes about 12% of the total sales, but major part of that is contributed from North America. As far as India is concerned, it's other than Symphony, there is not a single organized player. Here our market share would be very high, but difficult to estimate.
Fair point. Nipesh Shah, it was a pleasure speaking with you. Thank you very much for joining us.
As promised, we're going to get you some big market voices now. Udayan Mukherjee caught up with Lucy McDonald of the Allianz Global Investors as part of our special series London Eye, and began by asking her how she sees India and whether she's been able to spot any high-quality companies with great growth potential in a market like this. Take a look.
Particularly in the technology sector, where there is a very strong domestic and international growth potential, and companies which can compete on a global stage. And that, for us as global investors, is what we're interested in, is seeing where the companies are which have really been supported and have been able to compete. And that is an area where we're still interested. I think what's changing there is for the Indian companies is that the end clients for all of them are demanding higher value-added service, and they are changing the scale of the projects that they are asking for. And that so means that all companies need to be able to provide a lot broader services than they did in the past. So it's not just a question of outsourcing or even consultancy. It's a question of delivering very wide service offerings and digital transformation projects which are taking enterprises and moving them completely into a digital space. And that means having capabilities in cloud, in security, in automation, in all of these areas which the companies, the service companies, wouldn't traditionally have, but they're going to need to do if they're going to be competing on the world stage.
The other theme which people in India back home are very excited about is the domestic consumption theme. But do you find good companies there as prospects in your investment basket, Indian consumers?
Yes, I mean, our specialists in the area like the jewellery space, and that looks to us to be one which has got quite good demand growth. Even some of the areas which are sort of slightly lower growth are seeing slightly better prospects now in the rural areas, like some of the food companies, which have been a little bit depressed. But that seems to be picking up now. But there's huge potential, structural potential for consumption in India, and it's finding the companies which are both there and externally which are really able to benefit from that.
I come back to those external risks that we spoke about. Some global investors have begun to fret over issues like Argentina, Turkey popping up here and there. Do these have the potential to insert far more risk or volatility into the market, you think, in the foreseeable future?
Yes. I think that the biggest geopolitical issue that, as I mentioned, is trade, because that's the one that can have the biggest impact on overall global GDP. There are many incidents which happen around the world which are very dramatic, or can be very tragic, but they don't necessarily have a big impact on the overall economy. And at the end of the day, when we're investing, that's what we're interested in. So it's trade and any real disruption in trade, which is the big concern at the moment, and seeing how that escalates or not between China and the US, and how other companies get hit in the meantime by that is something that we're focusing on a lot. And one area in particular focus is the technology area, because there are big, long supply chains which go across the world, which can be affected by this. So that's one area we're looking at. Within that context, however, and if that is one of the biggest risks to growth, India looks relatively well placed because it's got such a good domestic focus. And that, I think, from the global investors' point of view and emerging markets investors' point of view, means that they will go to India when they're concerned about some of those big worries globally. So in fact, India can be a relative beneficiary of some of that.
Let me ask you about the US bond deal, because that's consuming a lot of investor attention these days. Do you think most of it is played out in that run up to 3% plus, or is that something which can inject a lot of volatility yet by surprising on the upside?
Well, our expectation is that the path will be slow of interest rates up from here for the reasons that I said. And the inflation picture, as far as we can see it, is relatively muted. in the US and elsewhere. However, there is more upside pressure than there's been for a while, and that's both in wages, because of the strength of the corporate sector at the moment, but it's also oil prices, and that shift in oil prices over the year has been quite strong, and that is coming through in some way into input prices. So there is a bit more upward pressure at the moment. However, it's really, when it comes down to what will shift the bond yields, is a combination of that inflation expectations, but it's also supply and demand. And so that's as we go through the year and we see the increased supply of treasuries coming to the market, that will be a big determinant of where those interest rates or the bond yields go. And for the moment, we think that will be managed. And so if there is a big